Hello, welcome back to Africa Tech Summit Connects. We're going to head to our next session now. Ahead of that, please remember you can post questions in the Q&A tab and they will be passed to the panel, and hopefully we can get some of the Q&A during the session. And with that, we're going to look at the meeting of markets, the convergence of fintech and digital commerce in Africa. With that, I'll hand you over to your moderator, Tom Jackson.
Thanks, Andrew, and thank you very much to everyone for joining us for one of these later panels at Africa Tech Summit Connects. I hope you've been enjoying the session so far, and stick around to the end, still plenty to come. This session is Meeting of Markets. We're discussing the increasing convergence of financial services and e-commerce solutions across Africa. The two are, of course, linked in a major way. One can't happen without the other. But until recently, fintech and e-commerce companies have operated very distinctly. Fintech, financial services companies building fintech solutions, commerce companies building commerce solutions. An e-commerce company might utilize the services of a fintech company, but that would be as far as it goes. Over the last year, however, we've seen an increasing convergence between the two, with financial services companies launching platforms that allow commerce to take place on their platforms, and retail tech startups rolling out financial services offerings of their own. With us today, we have representatives of Paystack from Nigeria, which is a payments company that recently launched a commerce-based platform. Yoco, a South African fintech that did the same. And Nigeria's Trade Depot, which is a retail tech startup, which, as I say, rolled out financial services offerings of its own earlier this year. I will, if we can invite the panelists on now, I'll ask them to introduce themselves very briefly so we can make the most of our time. If we could start with Marcello from Yoco.
Sure. Thanks, Tom, and hi, everyone. It's a pleasure to be here. So my name is Marcello. I look after expansion at Yoco. As Tom mentioned, we're a fintech company based in South Africa, essentially building platforms and tools to help make it easier for small business to accept payments both online and offline, and manage the business and access capital to grow. So that's us in short, and thanks again for having me on.
Thank you. Kachi?
Thanks, Tom. Hi, everyone. My name is Kachi Izukane from Trade Depot, based out of Lagos, Nigeria. Trade Depot is a B2B e-commerce platform, and we connect informal retailers directly to inventory from manufacturers, and have recently also then rolled out a lending service, a lot of financial services on top of this platform for these retailers. So thanks a lot for having me as well.
Great. And last but not least, Abdul Rahman.
Hi, everyone. I'm Abdurrahman Jobu here from Paystack. It's good to be here. So Paystack is a payments company. We help businesses like accept payments from anyone, anywhere involved. Helping businesses get paid from their customers, wherever it is they may be involved. So yeah.
All right, fantastic. We can't have this panel without mentioning the sort of elephant in the room, or the two elephants in the room. Firstly, thank you very much to our attendees from Nigeria here for making the time in spite of everything that's going on. We hope everyone is safe and well and everything calms down as soon as possible. The other one being Abdul Rahman, Paystack's big news from last week, the acquisition by Stripe for, we assume, a lot of money, a few numbers being bandied around. A major moment for you guys and for the Nigerian and the African tech ecosystem as a whole. Can you just tell us a bit more about the deal, give us some insights, tell us how it came about and what the plans are for the future?
Yeah, well, it's pretty exciting because Stripe is a company that we've had like a good relationship for a long while now, about 2 years or so or more. So it kind of felt like a natural progression. We have like lots of dreams, good dreams, stuff that we want to do. And like they are the one partner that can help accelerate our ambitions and like help us get to where we want to get to faster. So that's like pretty much why we're excited about this whole deal. And like the partnership and acquisition by Stripe. So yeah, basically that's it.
Okay, great, fantastic. Well, so I'm sure your colleagues on this panel today are hoping that, or are at startups that are aspiring for similar kinds of exits down the line. Paystack has just achieved one of these exits. What did Paystack do earlier this year? It bolted on a commercial platform onto its fintech offering. So would you mind just telling us more about that platform, why you expanded your services in that direction, and just give us some insights into that?
Yeah. So like for Paystack, like the biggest driving force behind like most of our product decisions like has always been to like help businesses sell and like accept payments from anyone, like I said earlier, right? So like right from the very early days, like we already like had like investments in we made investments in creating like simple seller tools that literally any business owner can pick up and start to sell with, even if they do not have a website. So like we've always done it. But it's that same driver, which is like helping more businesses on the continent to connect with more customers, that has like driven us to like make even bigger investments into like our commerce tools lineup. So the belief is that when our merchants have access to world-class tools, they can compete with their peers anywhere in the world and win. And it's like a fundamental need that they have, which is that they want to connect with more customers, they want to sell to more people. And one of like the best ways to do this is to give them simple seller tools that they can set up on their own and get started with very fast and easily. So yeah.
All right, fantastic. Marcello, Yoco has gone down a similar route recently. Just tell us a little bit about the platform you guys have rolled out, and was it in some way sort of spurred on by COVID and the need to get physical merchants selling more online during the lockdown times?
Yeah, so great question. So the initial problem we solved when the company started was the fact that South Africa is super highly carded on a consumer level. So, you know, good 75-80% of consumers use cards and have cards and use cards, but only 6 to 7% of SMEs were actually able to accept cards at the point of sale. And so we saw a massive gap in really helping bringing access to these small businesses to help them accept physical payments. But of course, what started coming up over time more and more is people didn't want to just sell in person, but they also wanted to sell online. They started going omni-channel. And so, you know, the way we started thinking about Yoco is not just as a way to accept card payments in the store, but really to become a platform for small businesses to accept any payment method that a customer might come up with. And so we have been looking at and working at online payments, but of course the pandemic increased it quite dramatically. When lockdown happened in South Africa, basically all businesses were closed except grocery stores and pharmacies. And our customer segment is, you know, mostly small businesses that sell a lot of other things. And so we saw a lot of businesses that were literally locked out of the economy because they weren't able to trade in person. And so we switched gears quite quickly. And one of the many things that we did during this time was to also introduce online payments for them. And the way we did it is we launched a couple of products like payment links, payment requests. We launched a page to help them accept, sell vouchers and accept payments this way. And we're now kind of working our way into the e-commerce integrations and so on and so forth. So our vision now is really to build a platform that helps a company accept any payment method in the easiest way possible.
Right. I mean, until now, when fintech companies have been expanding, it's been in sort of two different ways. It's either been from one market to another. So if you're in Kenya, you move into Tanzania, Uganda, Rwanda, whatever it is, or it's we do payments and now we also do lending and now we also do insurance. I mean, I know Yoco's done something like that. Do you expect to see more fintech companies expanding in this route, like moving into other verticals like commerce?
Look, I think to me, it's a bit of a question of how big your market is, right? And South Africa is a massive payments market. It's one of the largest, if not the largest, on the continent. And so, you know, kind of trying to go deeper into that market makes a lot of sense, and expanding your product portfolio in that market makes a lot of sense. At the same time, if you know, you might be starting in smaller markets, then expanding geographically quicker might make more sense. I think there's space for both of these things, and both of them are important because with how fragmented markets are on the continent, no single market is big enough to build a company the size that we want to. But it's a question of timing and sequencing. And I think as a rule of thumb, I would say the bigger your market, the more you want to expand product-wise before, and the smaller your market, the faster you want to expand geographically before.
I mean, no market is big enough, but if there's any market that's close to being big enough, it's probably Nigeria. Abdul Rahman, why did Paystack choose to go down the commerce route before? I know you've got big expansion plans, obviously, particularly after last week's news, but why did you choose to go down the commerce route before going for international expansion, before bolting on a whole host of other financial services? What was the appeal about this particular direction?
I wouldn't say we chose one over the other, to be honest. We are currently running a pilot in South Africa, for instance. It means like already today, people can sign up on Paystack, create their accounts, and start accepting payments using Paystack, right? So it's still in the early pilot stage. We're still getting like feedback from customers, from users, and building on the product before we do like a big public launch. We're already also like launched in Ghana. This has been like for more than a year now. Businesses can already like accept payments in Ghana. So international expansion is very much on our to-do list. Like it's stuff that we're actively working on, expanding into even more countries as we speak right now. Commerce just also happens to be an equally important thing, and like there's such a very big need for simple commerce tools. Like a lot of businesses don't need anything super complex. They really just want to like be able to create a simple online presence for themselves online. And we speak to like a lot of our merchants, and we saw that more than most things, this is one big pressing need that they have. And since like we are in like a position to solve it, we went ahead to like build on top of the previous commerce tools that we already had. So we had like simple payment pages, for instance, in the past. We have like invoicing tools and a host of others like that. And it was just like easier to build on top of it, seeing as it's like a very big dominant need that most of our merchants have, especially like the smaller merchants who simply just want to create an online presence for themselves, want to sell online, do not have a website, that type of person. Yeah.
All right, thank you. Let's look at it from the other side of the coin then. Kachi, you guys have obviously done very well in the retail space, building up a big network. You've just taken on some funding this year, and part of that funding is for you to roll out financial services offerings. I mean, just explain the thinking behind that and why you've chosen to go in that direction.
That we service, right? Yeah, so I mean, looking at a segment of customers that we service, these are usually small informal retailers, folks who are very manual, right? They deal in cash, they're looking to sell, face to face in their stores. And so the first focus for us was to integrate the supply chain and give them cost-effective ways of accessing the goods they need. Now, looking at financial services, there are two key drivers. One is to exploit the white space. There's an additional opportunity here for additional interest income from lending to these guys. But also there is the second reason, which is to reduce friction, right? And if you look at the customer base, you find that one of the things that drives their buying behavior is the amount of working capital they have access to, right? And so the behavior is these stores ordering 2 to 3 times every week because that's how much cash they have, and literally living from hand to mouth. So giving them access to financing allows them to grow a bit faster, but it also optimizes their ordering cycles, which for us helps us reduce the cost of logistics to service them.
Thank you. This probably is a silly question, but how inextricably linked are fintech and commerce, or financial services and commerce in Africa? Is this just a no-brainer when it comes to a lot of companies like yourselves? I mean, just that you can't have one without the other. So let's marry them together on one platform. Marcello?
That's an excellent question. I think they traditionally they have been fairly separate, because as Kachi was saying, a lot of commerce traditionally has been done in person and in cash. So there wasn't much tech or fintech needed to facilitate commerce. I think now that a lot of commerce is moving online, now that a lot of payment methods are moving online, that's where fintech becomes the core piece to facilitate these exchanges and to facilitate the flow of funds between customers and merchants. So I think increasingly fintech will be more and more and more and more important to facilitate change. But I think it's a progression that we're working towards, from a starting point of being fairly cash in person to now being increasingly online, digital, and of course using digital payment methods, be it mobile money, be it cards, be it wallets, be it all the beautiful things that are being adopted across the continent.
Abdulrahman, what's your view on that?
Sorry. Yeah, so like increasingly, well, it depends, right? Increasingly, I think we're going to see a lot more like fintech try to not go into per se, but like add on elements of commerce to their product offerings, because like we are in a continent where like the market we have is one where there is such a wide spectrum of different types of businesses with so many different types of needs that creating more choice for people is just a smart thing to do, because like you will always find like at the bottom spectrum, for instance, the type of person who only needs maybe just a single page on the internet for them to solve with, for instance, they probably are not looking for something very complex. They probably need just something like very easy, very simple, lightweight that they can build on top of. And we do not have a lot of those options. So I suspect that until lots of e-commerce people, platforms rather, start to like create solutions and products for people across all spectrums, then we are probably going to see more payment platforms try to create like platforms for everyone and on all the spectrum. Yeah, so that's how I'm thinking about it. I think that there is a gap and someone has to fill it. It doesn't matter who does, but until it's filled, we're going to see a lot more crisscross and people coming from this one platform. I mean, fintechs like building e-commerce platforms, embedding more payment solutions into their platforms.
Kachi, does it speak to the maturity of African tech startup ecosystems, or at least some startups within those ecosystems, that we're starting to see sort of companies operating across different verticals? I mean, is it just a stage of development for the ecosystem?
So yeah, it's a stage. It's difficult to define that stage as maturity, right? It will seem more like maturity of certain players within the space, not necessarily the ecosystem at large. And I say this because, again, the decision you always want to make is build versus partner, right? The opportunity being there is a given, but there are also times you want to achieve certain gains very quickly. You want your time to market to be very short, and you're probably better off finding a partner. And then when you're in those situations, you tend to find that your options are not that many. I mean, you would find ideally another startup who is building for the function or for the feature you need, or probably not for the customer segment you're focused on, and so on, right? So we reckon that as the market matures even more, when you're in these situations, your options when it comes to thinking of partnering would probably be a bit more. But where you are at the moment, the opportunity is there, and then you need to figure out the best way to take advantage of it.
Great. All three of your businesses are in different ways what we would call well-funded, particularly compared to the vast majority of African tech startups. Is sort of expansion in this direction only for startups that have deep pockets? I mean, do you need to invest a lot of capital in these kind of expansions? Abdulrahman?
Yes, I would say like it does cost a lot in terms of like the cash, in terms of like the manpower, like people, resources that you dedicate to stuff like this. So, and I think there's also like a relationship between startups who do well in their domains and how much funding they're able to raise. So it would kind of make sense to think of it from that angle, that if you have like more successful fintechs, for instance, it's only natural that they'll be able to like raise more money and be able to like divert some of that money into like building more services like e-commerce platforms, for instance, that their audience might be interested in. So I think it's more a function of gaining some sort of dominance in what you do, and which is usually also tied to being able to raise funds, and that funds naturally will be trying to satisfy your customer base by building other adjacent services that they might need.
Great. And Marcello, Yoco couldn't do this if it hadn't raised a sizable amount of money, no?
Yeah, I think so, but to Abdulrahman's point, I think it's not just the money, it's really about do you have enough scale in your core business to be able to expand horizontally into another business in a way that gives you an edge, right? So if you wanted to, you could go like fairly horizontal and build multiple products at the same time. But the reality is that a good vertical product expansion built on the strength and the network and the scale that you've built in your core product. So in our case, for example, we couldn't do cash advances to merchants if it wasn't that we've built a really good profile of a merchant and their trading profile and their risk profile over a long enough period of time and over a large enough number of customers. And being able to do that to some extent is a function of the funding that you have. But I think it's not just the funding that decides whether you're able to do that. I think it's really about is your core product kind of strong enough to support a horizontal expansion, and can these things build on top of each other in a way that builds a moat for you that nobody else can do like you can.
Kachi, is that the trade depot outlook on it as well, that you've built up so much trust amongst your retail base that now you can start also offering them financial services in addition?
So spot on, right? We're building this pretty much on the relationship we've built and the traction we've built. And having said that, even when you've done this, there is still the decision, right? Whenever it comes to rolling out an additional value proposition, because you run the risk of having a problem with focus, right? In the end, the priority is to at least be able to do one thing very well. If you found another thing that adds value to the first thing, and you find a way of executing that, the whole is a bigger play than just focusing on one, then by all means go for it if you have the resources. But that risk is something that I think is prudent to always pay attention to.
From a business perspective, how does it sort of change the dynamics within a startup's team? I mean, a team of people that's been very good at rolling out a financial services offering, for example, isn't necessarily good at rolling out an e-commerce offering. How does it change the dynamics? Do you have to go out and hire a whole new group of people to run these operations? I mean, what are your experiences bolting on these offerings? Marcello?
Yeah, so it's interesting because you start transitioning from a kind of single product company to a multi-product company, and as much as it sounds easy on paper, you start seeing that there's a lot of intricacies in terms of how you manage that, right? How do you track your numbers? How do you track now potentially different onboarding flows, different customer journeys? How do you do acquisition through potentially different channels with different value propositions? Like, it's actually quite interesting once you start going into that. The complexities and the intricacies and the detail become quite interesting, and in particular at scale. So I think but I don't think that it makes sense to bring on board completely new teams early on in the stage of a new venture, because you risk essentially building something completely in parallel that's siloed and doesn't really talk to the core business. So I think the approach here is you almost like you want to incubate a business internally. And then once it's grown to a certain point, then potentially spin it out internally into a standalone team or function or business unit or whatever you can call it internally. But I think a new product should always come from the inside, because that's the only way you make sure that the things are actually built on top of each other properly.
Abdulrahman, Paystack, I know, has been hoovering up quality staff in Nigeria. Did you just hire a whole commerce team, or did it come from within?
No, not at all. I think over time we've kind of built up the muscle for building different things fast, like iterating and just like building stuff. So our team is set up more like a team that can build so many different things, rather than thinking of it from a team that can only build fintech stuff, right? So when we started to build some of our new products and tools in the Paystack commerce line, for instance. What we did was we knew this was relatively new territory, and we spent a whole lot of time speaking to people. Like, it was a lot of talking to people, like minus the product angle, actually, just like trying to like understand their needs, and ensuring that we weren't making the mistake of building what we think they want, but that we're actually building what they want by taking them along literally all the steps, from the Figma mockups to the actual production cycles and all of that. So it's more of, we kind of have built the muscle of being able to build so many different things. So far as it's something we're like excited about, we can do it basically. So we didn't have to like build up a new, or rather hire a new commerce team. And we just looked internally and found like a merge of what we would call the right team, cross-functional across different teams, and yeah, go build this thing. And yeah, that's what we're doing right now.
Okay, Kachi, what approach are you guys taking?
I think you muted, Kachi. Okay.
Yeah, sorry. Yeah, so I mean, from a core engineering and product standpoint, we've pretty much worked off the same base, but for the actual lending operations, for that fintech team, we've had to go out and hire a team, a few people that lead that effort, and then are building a team both from internal resources and external as required. I think the additional challenge that you have to deal with is also from a customer standpoint, right? We're trying to, in the end, deliver one experience to the customer, and figuring out how these multiple efforts still result in a single customer experience that the customer is really excited about. I reckon that's the big challenge one needs to get one's head around.
All right, we've got a few questions coming in from the audience. This is an interesting one. E-commerce is a risky business in Africa, which I think we can all agree with. Would startups be mad to risk a good fintech business model on a 5 to 10 year gamble? I mean, the e-commerce has had its problems. I mean, obviously, particularly Paystack and Yoco, you guys have built up very successful fintech offerings. Is it a risk to diversify into a space that maybe you're not so familiar with, and it has also proven a bit of a ground of failure for quite a lot of companies so far? Marcello?
Okay.
Oh, sure. Look, I think the thing here, it's risky from an execution standpoint, because of course there's lots of unknowns, there's lots of challenges. But if you look at the macro trend over the next 5 or 10 years, it's almost a no-brainer that more transactions are going to be online, more things will be bought online, more things will be acquired online. So, you know, from a opportunity perspective, it's completely unrisky, but the risk comes from an execution perspective, right? And I think that's really where you're going to see the companies that win and don't win differentiate themselves, because it's like, how do you manage the risk? How do you manage the challenges? That's really what's going to set companies apart.
Abdurrahman?
Yeah, so in our own case, it's kind of slightly different in the sense that we're not looking to pivot or like replace e-commerce platforms, not at all. We're simply building like complementary tools for businesses to use, in some cases, alongside some of their existing e-commerce platforms, right? Or maybe like as a first stepping stone, before they eventually now go for something a lot more sophisticated. So it's not risky in the sense that it's something we know we can build well, something we know there is like a big need for, from like our merchants. So like we know there's that need, and we know we can build it well, and like we are building it for them. And also like it's not like we're not pivoting. We're never going to be like an e-commerce platform or anything like that. Or yeah, so it's just like an value add to our merchants. So if you think about it from that sense, it's not really a risk per se.
As I think you've all touched on, the key thing, I suppose, is that customers benefit. And it sounds like across the board, all of your customers are benefiting from this sort of vertical expansion of your products. We have to wrap up there. I think anyone that has anyone in the audience has follow-up questions for any of our panelists, they're all they're all hanging around and they're all over Twitter all the time and stuff like that. So I'm sure you can reach out to them directly. We are going into another session now. It's a fireside chat about scaling ventures, which is related to this session. So please head over there and stay where you are to catch that. I'll thank my 3 panelists from Paystack, Trade Depot, and Yoco. Good luck with your expansions. And Yoco and Trade Depot, you've got a bit of an example for you there, and we're hoping to see you joining the Big Exit Club sometime soon as well. So thank you very much, and everyone, please take care, and thank you for joining me today. Cheers.
Yeah, thank you.
Thank you.
Cheers.